So let's discuss pricing on your loans, specifically your construction and your bridge loans, right? These 12 to 18-month construction loans that we provide for you, right? When you speak to your loan officer, the key criteria here is, yes, credit, it is the project itself. Most importantly, it is track record. It is your experience, right? Now, the way that we actually price out projects is on a tiered basis of experience. We are built to scale. So the more projects you do as an investor, whether it be with us, somebody else, your partners, right? As long as you are on the paper for those projects on an operating agreement, on the LLC, they're in your personal name and they were investment deals, we can count that towards your experience. So long as those projects were exited within the last 3 years, meaning you refinanced or sold it. Pricing is very dependent on that 3-year track record. We do want to see that you have minimum credit scores, whether it be 660 plus or on specific programs 680 plus. That's simple. From there, it's really making sure your loan officer understands how many projects, how many relevant projects you've exited in the last 3 years, whether you were 25% partner on a deal and can show it on an operating agreement, or it was your deal completely the whole way through. The more projects you've exited, the better. We can get you different leverage programs, different pricing options. Now, I do want to mention that no matter if this is your first project or let's say your 20th deal, we'll provide a 0-point option at each tiered level of experience. Meaning if you are a new investor or a pro developer, you'll still be qualified for a 0-point program where you're paying us no origination fees at close. Cannot stress enough. Filling out that REO schedule, that experience resume, it's a one and done thing, especially for experienced investors. Typically that can take 10, 20 minutes if you've done a lot of deals, but it's so important because it allows your loan officer to manage your expectations and go through your proper debt costs so that going into the project, you know your costs out of pocket, you know your monthly payments. Again, we're looking at the last 3 years of experience of relevant projects you've exited. We have different types of construction programs. We have fix and flip and renovations where people can do additions or just full gut renos, right? Or even cosmetic flips. And then we have new construction. Those programs are priced differently. The leverage is a bit different, right? We can lend 80 to 90% on an acquisition and 100% construction on fix and flips and renos, depending on 3-year track record, right? And we even have high leverage programs on new construction where we can go from 60 to 70, sometimes even 90% on new builds. But the key here is we need to show experience from one of the co-signers on the loan. So anyone signing the loan, that's where we're looking at the proper experience in the last 3 years to make sure they can do a deal, that they can do a construction project that's relevant to a previous project they've actually done in the last 3 years.